Good afternoon, everybody. Uneducated Economist here. I was just reading an article talking about how corporate debt is now moved back into negative territory, where corporations are able to borrow money and pay back less than what they borrow. It's just like, it is very difficult to try and wrap your head around that an investor would be willing to give up their money knowing that in the future they would get back less than what they are loaning out right now. Because that's what you are doing. When you buy a negative yielding bond, you are basically saying, I am going to loan you money knowing that I'm going to get back less money than what I am lending you out right now. And the only reason why a bond investor would be willing to do that is if they are convinced that interest rates are going to continue to go down into the future. The Federal Reserve has promised that they are going to maintain low interest rates for the foreseeable future, until inflation runs long enough at a pace high enough to maintain a 2% average inflation rate. The Federal Reserve is not going to raise interest rates even if we start getting inflation. And this promise that they have made has rippled throughout the rest of the economy because they have convinced everybody that these interest rates are going to continue to stay low. Okay? This battle between gold and bond. Okay, these two different investors out there, the gold investors and the bond investors, had always clashed. They had always said the reasoning that their investment was better has now become the same. Okay, let me explain it like this. The gold investor out there, they would buy gold because it was a hard asset in your hand, outside of the banking system, tangible, useful. But the reason why they bought it is because they anticipate that in the future, they'll be able to sell it for a profit. They are anticipating on selling it to the greater fool. Okay? That's why it's called that. It's because they bought it cheap and they want somebody to buy it for more than what they paid for it. They want to sell it for a higher price. They are speculating. The bond investor used to use that as the argument, that they are anticipating on selling that gold to the greater fool. When you buy a bond, you are buying it knowing that you can get an interest rate off of it. So even if you don't have any intentions on selling the bond, you can maintain this income from the interest rates that these bonds pay. Problem is, the interest rates are so low and turning negative that there is no way that the investor will get paid back anything when this bond matures. As far as the profit goes, they'll get paid back some. They'll get paid back the face value of the bond. But the price they paid for the bond will mean that they are definitely going to lose money by holding on to that bond till maturity. But if they hold on to that bond until interest rates drop into the future, then they'll be able to sell that bond for a profit. They are intending on selling it to the greater fool, just like they are gold. I think about what it is that the Federal Reserve anticipates doing in order to get the inflation up to that 2%. They don't even want it up to 2%. They want it to run above 2%. They want it to run above 2% for an extended period of time so that they can maintain that average inflation to 2%. And they don't talk about how far back they're going to go. They don't say we're going to try and maintain a 2% average inflation over the course of a decade. They don't say it like that. At least that's not what I've heard. And I haven't heard anything coming from the Federal Reserve about how they intend to get inflation up to that 2% or above 2%, considering that they have been trying to get to the 2% inflation rate for the last 10 years and have failed miserably at it. They have only been able to achieve 2% just a couple of times, and they have been under that 2% target for most of the last decade. But they say, well, because we ran so low on inflation for the last decade, we're going to run inflation hotter than normal to try and make up for that lost time of the decade being under 2%. But they don't say how it is that they're going to get inflation to run above 2%. And now here it is, people are going to invest money buying bonds from corporations that are guaranteeing that they're going to get paid back less money over the course of time if they hold that bond to maturity. And all these investors are now speculating in the bond market, anticipating that the Federal Reserve is going to maintain their word and keep interest rates low coming into the foreseeable future. See, the Federal Reserve would try and raise interest rates to keep the economy from running too hot. They would look at unemployment. They would say, oh, unemployment's running really low. We have to start raising interest rates because this money velocity is going to start getting in. Inflation is going to start spinning and we're going to run out of control. So we need to raise interest rates to keep the inflation from running too hot. We had the lowest unemployment numbers, the best jobs market that we have had in decades, and it did almost nothing for inflation. Like, this is what they would refer to as the Phillips curve. More employment with less unemployment going on would eventually equate into higher prices with money velocity. I mean, there's a big formula for it. You can look up the Phillips curve. They talk all about it. But they have pretty much proven over the last 10 years that the Phillips curve, especially after this last, low unemployment numbers that we had, best jobs market in a decade, the Phillips curve has pretty much failed. It did not hold up to what it was originally intended to show, because the idea was that this graph was going to show you how much inflation was going to pick up by looking at the jobs market, and it's failed completely. It just didn't work at all. So that's the big question now is like, what is it the Federal Reserve is going to do? I mean, what is it that they could possibly do to cause inflation to rise outside of injecting money directly into our pockets? And it certainly seems that's the case. I had a gentleman email me the other day with a few links, and I'm going to send you some, put some links down in the description for you guys to all this stuff. And he sent, I think it was 3 or 4 articles that really show that the Federal Reserve has very much a big intention on bringing digital currency to the system. They have a Craigslist ad looking for people who are technically capable of working in this digital currency field, right? So they have jobs openings for these for this digital currency, working with MIT. It's pretty obvious now that the whole system that they are setting up right now is gearing to a cashless society. This whole change shortage thing, it's a very big mystery. Nobody really can explain it correctly, why we're still running short on change, except for that it's discouraging people from using cash and pushing people more into using, digital forms of payments, using like credit cards and, stuff like that, debit cards. So the Federal Reserve is working very diligently behind the scenes to make this stuff happen, to make this digital currency take place. And I have a feeling that once this digital currency is up and running, there really isn't going to be a whole lot of need for these banks. If interest rates are running negative, it's already proven that banks cannot be profitable at a negative interest rate. It is very damaging to the banking system. And if we are starting to move towards negative interest rates, then the whole point of the banking system that we are knowing it as today will be useless. Nobody can foresee the future. There's a lot of ways that you can look at the current trends and kind of predict what is going to be happening. But nobody can predict the future. Nobody knows. I was reading an article talking about how the possibility of a gold standard could never come back to this country, never come back to the economy. And I disagree. I very much disagree. I think gold could be. I think digital currencies could be. I think the fiat currency can continue to go on because it seems that there is no way of killing this thing. If you were to ask people about fiat currency back in 1913 when the Federal Reserve first introduced these paper dollars into the system, these fiat, promissory notes essentially, I'm sure of it that you could find plenty of economists who said that this will not last 10 years or 20 years or 50 years or the 100 years. But yet here it is, still going. Now, I'm curious at the value of the dollar right now. Now, I know I'm kind of babbling here, but kind of stick with me a little bit. Since 1913, the value of the dollar has lost like 99%. Okay? And we're sitting at like 1% value on this dollar compared to 1913. and the Federal Reserve intends on running inflation hot, what I am anticipating is that they are going to run inflation hot until it kills the dollar off. And by that time, which may take years down the road, I don't know, but by that time, the digital currency will be up and operational. And I feel that the reasoning why they have individuals like Judy Shelton being pushed so hard for the Federal Reserve, even though the Federal Reserve former employees have got together and saying she's bad news for the Fed. Well, if the former employees for the Federal Reserve are saying that Judy Shelton is bad news for the Fed, then I definitely want her in there. And it wouldn't surprise me that if Judy Shelton was in there, that she would be working on this digital currency with a gold portion, like a portion of it being backed by gold. Why else would they want her there? They need somebody who has at least thought about the gold standard in modern day. Not talking about the old gold standard from 100 years ago or even 40 years ago. We're talking about a new gold standard, a new concept. One that can be exchanged through a digital ledger system. The world is changing fast, guys. The world is changing very fast. And these negative corporate debts, that's like an unsustainable form of credit going out there. When the bond investors no longer feel that speculating in the bond market with negative interest rates, knowing that they're going to definitely lose money out by buying these bonds, is going to turn very bad when these interest rates start to rise. Those bonds are going to become toxic assets. And nobody's going to want them. And they will sell them at any price. And the interest rates are going to go through the roof. And the people who are holding them are going to get hammered. Uneducated Economist. You guys let me know.